we've got a very special guest joining us on the show. Anu Jain of IIFL Wealth is here with us. Anu, good afternoon. Thank you very much for your time. Last time we spoke, we were in our office and you had come down to our newsroom right across from your office. Now we are in a new world. How are your conversations happening with your affluent and HNI clients across the country? How exactly are they approaching the markets?
Well, yes, it's different times, but I think humans are a very adaptable race, and we'll make do with what we have. We use Microsoft Teams in our office for internal and external communications. So most of our meetings are happening on, Teams, on Zoom, on video calls with every definitive app which is possible. So I think it's work as usual for us. And clients are very active at the moment, both in direct equity and on other places. So I think we have more work than we've had before. So we are making the best of what we have.
Right. Anu, what is the hypothesis you are making right now as far as the frontline indices are concerned, be it the Nifty or the Bank Nifty? We saw a very vicious cut in March and then a big 40% rally. Jury is out whether people wholeheartedly could participate in that or not. Tell us what was your communication to your clients? Did you manage to get them to participate in that sharp rebound? And what's the hypothesis you are communicating now to your key clients?
Okay. So a couple of things in terms of I think Karan has been earlier on this show and he's explained the model which we work on, which is, basically using the valuations of the market to decide the participation in equity. That is a IIFL Wealth model that we use for clients as to how much they should be invested in the equity markets, given where the multiples are, both price to book and in, using your price to equity. Only thing is, given this year, I don't think PE model is going to be the best model available. Given that, we had advised clients and a lot of clients did add, around the 9,000 level. I won't say that we got the bottom and we added at 76, but at 84 to 88, a lot of clients did add. It depended on how their levels were. But beyond 10,500, 600, again, our model is being cautious at this time, especially around these levels of, 11,700, 11,800, where we were on the day on Monday. And around these 11,500, I think we are into resistance zone. Given how things are panning out, and you're asking me on a view on the Bank Nifty as well, I think closer to 24,400 to that zone of 25,000 of the Bank Nifty is also a resistance zone. So we are practically there. The fact of the matter remains that these are the valuation calls, but liquidity in the market, which was coming, which is about 11 to 12 trillion in what has been released in the world, is basically got very few assets to chase in this particular market situation. So what it's going to chase is not real estate. It's not chasing anything. And money supply, we had done a test where it's up about 36% for us and about 30% in the US markets. So when there is too much money supply, not too many assets, that mismatch will lead the markets to go up. With the dollar index continuing to be where it is, I think it is possible that you will see possibly from here to November, no major fall till the US elections take place. So you may be in a slightly dicey situation where there is very little that you can advise clients to buy, and you're not yet ready to take a very strong cash call. But yeah, we are pruning exposure to equity when we find a severe mismatch in valuations, or we find that we've got something where we can probably come back to later if there is a correction. So broadly, now we feel that markets are fully valued. We would be cautious at this stage.
Sure, fair point. Anu, let's understand with one of the biggest contributors of the market in the last couple of months responsible for this rally has been Reliance Industries. News flow was good. Historic fundraisers happened and there was a big breakout. How are you reading the charts and the structures for Reliance Industries? short term, medium term, slightly longer term?
Well, this has been a market leader from, I think, from the time March kind of it dipped down. And then from there, I think the strong breakout came close to about 1200 levels, from where it kind of didn't give any breather to the rally. It's only been when it's been closer to 2200. And if you look at the partially paid, it's been over that 1250, 1300 zone where it's seen resistance. I think the charts continue to be strong. If there is any correction, we would be advising it's one of the biggest holding in my model portfolio for our advisory clients. We would be adding on dips. It is obviously, if the market's correct, this being about 14-15% of the index will also correct accordingly. But if you're looking at long term, just charts are indicating that probably 2450 to 2500 is where it's headed to in about a year and a half time. Overall, I think our research piece is extremely positive on telecom, on the digitalization space, and given now that it's got a fairly good piece of the retail space as well, where there may be some stake sale happening, I think there'll be buoyancy in this stock. So I think closer to about in the last one and a half month, the closer it's gone is to the 2000 levels. But if you get now closer to 2060, 2080 levels, I think that would be fair enough levels to start dipping into it.
Mm-hmm. Right. Anu, now that you spoke about telecom, Airtel had a massive run from 300 odd. If we were to talk about a 6 month plus view, and then it got at 600, it came back to 500 and went into a small range before this verdict actually came. It tried to come out. What are your thoughts on Airtel, and would you have an opinion on Idea as well? That's been loved by the market. No matter what happens, a lot of retail portfolios, big HNIs have made positions there.
So there's a big difference in the way people are approaching both Bharti and Idea. Whereas Bharti is a long-term stock, where the story which people are looking into is a ARPU play, with ARPU kind of moving up closer to 200 rupees over a year and a half too. And the fact that it's kind of paid up the more than 10% of what is required to be paid as per the AGR ruling. Idea is more of place that they will be able to survive and hold a 15% market share, and probably this is like a bottom up from it. But where I see a differentiation between the kind of people buying Idea and the kind of investors buying Bharti is generally being bought by long only clients who have a view of 3 years, 3.5 years. Even at this current rate, they're finding that probably the stock can give you a 30-40% over the next year and a half. Also, it will be fairly resilient, as we saw in the last time in March. This was one of the stocks which was most resilient in the market. It in fact went up when the other stocks were going down. So it is something which is like the shock absorber for the market, and I would continue to hold this even if the markets were going down. This is not one stock I would prune. Idea, on the other hand, is more like a trading stock, at least from what I've seen from my desk, where people participate more for that quick 20% and then they kind of sell into it. Would like to wait and see if this time, post this announcement, how, and the fundraise and how it goes, that can they kind of establish themselves as they're here to stay with a bigger market share? Because last couple of quarters, it's not giving any confidence with the kind of market share it's losing. So while it's a trading stock, I am still not convinced that I would like to hold it in portfolios for 2 years.
Fair point. Let's shift focus and talk about the banking space. April, May, June, it was the most hated space. NBFCs, also the larger ones, bank, Bajaj Finance came down to almost 1800 at the low. And then last 1 month, there seemed to be, be it short covering or valuation became attractive. People start getting into the top 5 names, a couple of NBFCs as well. How do you look at the entire lenders basket, and which are the ones which you like better than others? If you could share some names.
So when it comes to the bank Nifty, yes, it's been a laggard compared to the Nifty. Even now, if you look at it at about 24,400, there's resistance if it crosses that. Then you get 25,200 as a possibility, which is again resistance zone. In terms of the reason why last 1 month it's been so strong is if you look at the dollar index and the way it has been performing, it is more a play on that, because when your currency gets stronger, it's usually the bank index and the bank side which kind of gets strengthened. And so this is more a play on that rather than actual performances, because results were out before. Yes, some part of it has been result oriented also. Most of the better banks, or rather, let me say, a lot of the banks have raised capital. Some more capital raising is around the corner. And I think that is pretty imperative for the next 6 to 8 months, which is yet set to come. A lot will depend on what is being announced in the next couple of days by the finance minister on how the loans are to be restructured. I think that's just next 2 or 3 days, and market would wait with bated breath as to how that's going to happen. In terms of lending growth, in terms of NPA, we may not really recognize it as NPA, but we all know that that's just kicking the can, along the road. And that's not giving anybody comfort to hold to lenders where the book or the quality of the book can be suspect. So obviously the high quality banks will be in premium, and though they are expensive relative to the rest of the banks, we would continue to hold them. So there it's again the HDFC Bank, the Kotak Bank, the ICICI Bank, which would be our top 3, which we would hold. We are suspect, so there are quality names in the NBFCPs also, but I think we would kind of be a little more cautious because valuations have been cheaper for some of them, but some of them have actually run up very sharply in the last 2 months or 3 months. So at this price, they're fully valued. So there is no valuation play right now. And with the next 6-8 months looking tough on the collection front and on the lending front, we would be slightly more suspect. So we are playing the financial sector more as not lenders, but people who would make money out of probably people investing in the financial sector. So the AMCs, even the insurance play. So a large part of my banking exposure has shifted to insurance company, both general and life insurance. We're looking at more on the insurance play, leading as a financial sector play rather than pure banks.
Fair point. The other space which has started correcting last 10 days is the pharma space. Now, we all know that almost consensus building in the market that pharma could be the leader of the market this time. At least there is liking for all the top 7, 8, 10 names, a clutch of API names. Any thoughts there? Any names you like from the pharma and chemical space? Do you agree that it could have big potential going ahead, like some others believe?
Yes, so you've had a sharp rally for the last couple of months. Pharma has raced ahead. It's taking a breather, just like IT is taking a breather. Also some connection to the rupee, obviously. So we feel that overall pharma will have the next 1.5 year good. Given the way post-COVID, a lot of sales are going to be higher for some products. Acceptability of Indian products abroad is also going to be raised. We are positive in a lot of names. From the Indian domestic market, we like Torrent, we like Ipca. From the export side, we do like Dr. Reddy a lot. Apart from Dr. Reddy, even in the small, Cadilla seems to be good. Obviously, APIs, Divis, expensive, but still good to hold. So not that we are actively adding right here. We have substantial exposure for clients. But if there is any correction, these 5-6 stocks seem to be a positive bias for us to kind of add into it.
Right. Anu, just last word on the broader markets. After the 2-3 month rally from March lows, we also have seen last couple of weeks that as the liquidity which you were alluding to has started flowing into broader markets name also, and many of them have more than double, tripled as well. It appears that participation is getting wider. What are your thoughts on the small cap, mid cap space, how it could go from here on?
There is a lot of it which actually good manufacturing companies. So my thing is that since 1st of September, since we've got the margining rules coming up, I'd like to see how the next 15 days kind of pan up with people not being able to trade BTST as much or intraday trading as much. That's one filter I'm watching out for. But as investment, we are actively looking at high ROE companies which have manufacturing as a core bet with a potential export market. So even if you look at everything which comes from, say, the pharma market or the fine chemicals which you were mentioning earlier, some of even the infra companies also, which we're really not looking at, but where there is a fair amount of order book and things can go on and they have a fair source of revenue. I think those mid-cap companies, if they've been fairly beaten down, and we all know the mid-cap index has been correcting since the last 2.5 years. So it's underperformed the Nifty substantially. So it's catching up now. It may again correct, but I do think that there is a potential in that index to be invested on dips for the next 2 to 3 years, because there are some very good companies which had not kind of run over that strongly for the last 2.5 years, and potential to give you at least a 15-18% CAGR, which the Nifty may not give you for the next 1 year, is still there.
Right. Fair point. All right, Anu, I'll let you go on that one. Thanks so much for joining us today and sharing your thoughts on the market and specific stocks from the sectors which we discussed.
Thank you.
I look forward to having you again sometime.